The number that stopped me was not the biggest one on the page. It was a vendor payment from 14 months earlier. $740. Paid to a cleaning supply company I had never heard of and never ordered from. On a Tuesday in March, when I was in the middle of a production run that nearly broke us, I stared at that line item for a long time. Because I had seen a payment like that before. Not to that company, to a different one, 3 months earlier. And before that, another, same amount range. Always a vendor. Always a Tuesday. Always a period when I was distracted by something larger going wrong somewhere else. There was something else I noticed that night, a name on a forwarding address, buried in a vendor registration form I was never supposed to see. I held on to that detail and said nothing. Not yet. But to understand why that detail mattered, you need to understand exactly who my accountant was and why I trusted him with everything I had built. By the end of this, you are going to understand how a single audit request one letter, mailed on a Thursday afternoon, unraveled 3 years of quiet theft and ended a career that had survived on other people's trust. This is not a story about dramatic confrontation. There was none. This is a story about a folder, a spreadsheet, and the particular kind of patience that comes from finally understanding what you are looking at. The audit did not give me back what was taken, but it closed a door that had been open for a very long time. And that door had been used before by someone I had not yet found. I started my catering supply business out of a rented warehouse on the east side of the city. 12 years before any of this happened. 2 things were true about me from the beginning. I kept meticulous records of every delivery, every client, every invoice, not because I was trained to, but because I had watched my mother lose a small grocery business to a bookkeeping error she never fully understood. And I was loyal to a fault with the people I brought in close. If someone did good work and showed up when it mattered, I held on to them. Those 2 things would work directly against each other before this was over. My accountant, I will call him Marcus throughout this story, though that is not his real name, came recommended by my commercial real estate attorney 6 years before I found that Tuesday payment. He had a tidy office, a wall of certifications, and a handshake that felt like a contract. He was methodical, good at explaining things in plain language, and he never missed a deadline. For the first 3 years, everything he touched seemed to run smoother. He was also the one who suggested we consolidate all vendor payment processing through his firm's payables system. It would save me administrative overhead, he said. I would only need to approve batches at the end of each week. The day-to-day would be handled. I said yes. That was the door. I did not notice when things started shifting, because the shift was never dramatic. A quarterly report that ran a few weeks late. A vendor category that looked slightly higher than I remembered approving. A software subscription I did not recognize that Marcus explained away as a platform migration fee. None of these were large enough to stop me cold. Taken together, across 36 months, they added up to $94,000. My daughter was sitting across from me at the kitchen table the night I first ran the numbers. She was doing homework. She did not look up. I closed the laptop and sat very still for a while, because I needed to be certain before I said anything to anyone. The first thing I found was the cleaning supply company. 7 invoices over 14 months. Total paid $4,380. When I searched the company name, I found a registered LLC in another state, registered 11 months before the first invoice hit my books. The registered agent's address was a mailbox service. The phone number on the business registration led to a voicemail that was never set up. I made a note. I kept going. The second thing I found was a pattern inside the payroll records. Marcus processed payroll for my 12 full-time employees through his firm. That had always been the arrangement. But when I pulled individual pay stubs against the batch approval logs I had signed, I found 3 employee codes that did not match any name in my HR file. Each one had been receiving a bi-weekly deposit ranging from $900 to $1,200. The deposits had started 26 months earlier. They had never stopped. I stopped what I was doing and sat back in my chair. 3 employees that did not exist. Drawing paychecks for over 2 years. When I calculated those deposits, the total came to $61,400. But the third thing I found was the one that stopped me cold. When I cross-referenced the forwarding address from that vendor registration form, the name I had noticed on that first night, it matched a personal LLC Marcus had registered in his wife's maiden name, filed 18 months into our working relationship. The same LLC appeared on 2 of the ghost payroll accounts as a secondary payment address. This was not careless. This was built. I sat in my car in the parking lot of a grocery store and did the complete math. Vendor fraud. Ghost payroll. Platform fees billed to my account for subscriptions I never used. Across 3 years, the number came to $94,000. A woman named Patricia, who had used Marcus before me, found out later she had lost $67,000 over 4 years. A man named Elliot, who ran a small print shop 2 miles from my warehouse, had lost $31,000. Both of them had complained to Marcus directly when they noticed discrepancies. Both of them had been given explanations they did not fully understand. Both of them had eventually let it go. I was not going to let it go. The first person I told was my attorney. She listened to everything. She looked at the documents I had printed and organized by date. She was quiet for a moment, and then she said something I was not expecting. This is probably recoverable civilly, but proving intent is harder than people think. He'll say these were errors. Firms lose records. If he's been doing this for years and nobody has successfully prosecuted him, you may be walking into something long and expensive. She was not wrong. My accountant had been in business for 19 years. He had professional liability insurance, a licensed CPA designation, and a reputation that from the outside looked completely intact. Nobody I had spoken to publicly had accused him of anything. My attorney told me to think carefully about whether I wanted to be the one who went first. I drove home from that meeting and sat in my car in my own driveway for close to an hour. There is a specific feeling that comes when you have done everything right, kept the records, run the numbers, confirmed the pattern, and the people around you still tell you it might not be worth it. It is not anger. It is something quieter and harder to name. I sat with it. My business partner, who I had brought on 2 years earlier, suggested I confront Marcus directly before doing anything else. Let him explain it. Give him a chance to make it right. I thought about that for exactly 1 day. Then, I thought about Patricia and Elliot, and about the LLC filed in his wife's maiden name 18 months into our relationship. People who make errors do not build parallel structures to receive the money from those errors. I did not call Marcus. I did not confront him. I did not send a letter. And then, I did something nobody told me to do. I opened a blank spreadsheet, and I started building a file I would eventually call the folder. The folder had 7 sections. Section 1, the complete vendor fraud record. every invoice, every LLC registration, every payment date, every amount. Cross-referenced against my weekly approval logs. Section 2. The ghost payroll record. 3 employee codes, bi-weekly payment history, total dispersed, connection to Marcus's personal LLC. Section 3. The platform fee irregularities. Subscriptions billed to my account. No service agreement on file. Total amounts by quarter. Section 4. A timeline. Every discrepancy mapped to a calendar. The pattern was clear activity concentrated in periods when I had a major operational problem that kept me away from the books. Section 5. The names. Patricia, Elliot, the dates they had worked with Marcus, the rough dollar amounts they had shared with me when I finally called them. Neither of them had filed anything formal. Both of them said they would now. Section 6 was the legal research I had done on my own. I learned that the Association of Certified Fraud Examiners reports that businesses with fewer than 100 employees lose an average of 5% of their annual revenue to occupational fraud each year. I had been losing far more than that concentrated, strategic, and invisible to me because I had handed over the controls that would have caught it. Section 7 was blank when I built it. It was the section for what came next. I learned that the EAR's Criminal Investigation Division accepts referrals for suspected tax fraud from private individuals, including cases where a third-party accountant diverts business funds in ways that distort taxable income. I learned that the state CPA licensing board accepts formal complaints with documented evidence and has the authority to suspend and revoke professional licenses following investigation. I learned that civil recovery through a fraud lawsuit is a separate and parallel process, and that professional liability insurance, if Marcus carried it, could be the source of actual financial recovery. And one name I kept coming back to in the licensing board complaint procedures, a field for listing other known affected parties. I had 2 names ready to put in that field. On a Thursday afternoon, I printed the complaint form. I wrote 4 words at the top of the first page under my business name, formal complaint, with documentation. I placed the folder inside a padded envelope. I sealed it. I drove to the post office myself. I did not tell Marcus anything. The state CPA licensing board acknowledged receipt of my complaint 11 days later. Their investigator contacted me 3 weeks after that. She asked me to walk her through the documentation I had submitted, not because anything was unclear, but because she said she wanted to hear the chronology in my own words. We were on the phone for 90 minutes. At the end of that call, she asked me one question I did not expect. Had I ever seen Marcus interact directly with any of my vendors in person, or had all contact gone through his staff? I told her it had always been through his staff. She thanked me and said she would be in touch. What I did not know at the time was that my complaint was the 3rd one the board had received referencing Marcus in the past 18 months. The other 2 had arrived from CPA licensees in different counties, one a former colleague who suspected Marcus had overbilled a shared client, another a firm that had flagged irregularities in a set of financials Marcus had prepared. Neither of those complaints had included the level of documentation I had provided. Mine was the one that gave them something to build on. And then came the part I did not expect. 6 months after I mailed the folder, the board's investigation triggered a coordinated review with the EAR's Criminal Investigation Unit. I learned this not from the board directly, but from a letter I received from a federal investigator asking me to preserve all original financial records and correspondence related to my business accounts going back 5 years. The civil fraud lawsuit I filed through my attorney separately from the licensing complaint was settled 14 months after I mailed the folder. The settlement covered $61,400, the full ghost payroll amount, confirmed by payroll records and banking statements. The vendor fraud recovery went to civil court and was awarded separately, $32,600. Combined recovery, $94,000. Exactly what had been taken. Not a dollar more, not a dollar less. The state licensing board issued a formal notice of license revocation for Marcus 8 months after I filed. The revocation was public record. His name appeared on the board's published disciplinary list, searchable, permanent, and visible to any future client who knew to look. The criminal referral to federal investigators was a process I was not a party to. I was never told what happened inside it. I was told only that my documentation had been useful. That was enough. Patricia recovered a portion of her losses through the civil process after she filed her own suit using documentation she had not previously organized, but found when she went back through her records with fresh eyes. Elliot chose not to pursue civil action. He told me the money was gone, and he had decided to move forward. I understood that. Not every person who is wronged has the energy to build the folder, and not every outcome of building it looks the same. But Marcus's license was gone, and when someone in another county searched his name before signing an engagement letter with a firm he had quietly joined, they found the board's disciplinary notice on the first page of results. I know this because that person contacted me. Justice, when it comes, does not undo the months. It does not give back the nights I spent running numbers instead of sleeping. It does not restore the meetings I sat through while something was happening in my accounts that I could not see. It does not remove the particular exhaustion of trusting someone completely and then having to reconstruct the full truth of what that trust actually cost you. What justice does when it is built correctly and documented carefully is close the door. Marcus had been in practice for 19 years. In those 19 years, he had built a method that worked precisely because it relied on distraction, on trust, and on the near-universal reluctance of small business owners to admit they did not understand what they were looking at. I was not the first. Patricia was not the first. There were others whose names I never learned, but I was the first to build the folder, not the first to notice, not the first to suspect. The first to organize everything I had into something a licensing board investigator could work from on a Tuesday morning without needing me to explain it. The ACFI reports that the median duration of an occupational fraud scheme is 14 months before it is detected. Marcus ran his for 36. He lasted that long not because he was particularly brilliant, but because his clients busy, trusting, distracted by the actual work of running their businesses, were not yet looking for what I eventually found. If you are a small business owner listening to this, I want you to hear one thing clearly. The people who steal from you quietly are counting on one thing, that you will never look closely enough, long enough, to see the whole picture. Every business deserves a record that can speak for itself. Build it before you need it. Most people build it after. I built mine 14 months too late, but I built it. 3 months after the licensing board published Marcus's revocation, I received a message from a woman in another state. She had found the disciplinary record during what she called a routine background check on a new hire for her firm's bookkeeping department. The candidate's previous employer references had checked out. His certifications were current. His resume listed 5 years of clean experience with small business clients. She sent me the company name he had listed as his most recent engagement. She sent me the license number he had used on his application. When she sent me the forwarding address associated with his professional registration in her state, I recognized the pattern. The LC name was different. The state was different. The address was different. But the structure behind it, the vendor categories, the payroll setup, the timing of the billing cycles, when I looked at what she had attached, I recognized the work. If something in this story matches something you have been living, leave it in the comments. You may already be one piece of someone else's folder.